use with the client. What I'm going to do is after presentation, I'm going to make a YouTube video on the presentation itself. And I will also send you this PDF file. I'll post this PDF file on our line chatting group chat so that you can actually download it and use it. This is a client-friendly material that Ameritas has made. Should we consider life insurance as an asset or as a liability? I guess you guys already know, and there's a very good information about how and why we should consider life insurance as an asset, not as a liability. So I'm gonna blow it up a little bit. Life insurance as an asset. The value of asset diversification. Life insurance is an integral part of a diversified portfolio, meaning life insurance is part of financial planning, and it is an asset. It is not a liability. A lot of times people treat that as a liability, thinking that, hey, life insurance, what do we do? It's a waste of money unless we die. But that's not the case. It is an asset. It creates wealth and financial well-being for your family members and yourself. Number one, the overview of what I'm going to talk about, what this brochure is taking you, is to create financial protection for your family. So if the person, the breadwinner dies, it gives certain financial stability to the remaining family members, surviving family members. And number two is that it builds equity to supplement future income needs. So it actually has a cash buildup. So you can use it for retirement. You can use for your, if you're young, you can use it for your kids' college fund. You can use it for emergency fund. You can use it for down payment on your house. I told you my personal story. My sister-in-law actually start out life insurance as soon as I got my license. And with that money, she saved up that money before, while she was working part-time when she was in college. When she got married, when she has a kid, she used that cash value of that life insurance policy and used that part of that as a down payment for her first house. So this is a great savings tool. And another thing is that it leaves a legacy to the ones you love. So if you have your full lives and you leave something behind to your family member, and a lot of times it is the most tax efficient way of leaving your money, your wealth, transferring your wealth to the generation who's left behind. So that's the things that we're going to talk about. Next page. These are the things that people are interested in when it comes to financial issues. And I thought that it was, whenever we hear about financial planning or financial strategy, a lot of times we would think that people think about not losing money in stock market or making lots of money in their investment. I was a little bit surprised. Very first thing, it is almost 70% of people who participate in surveys say that living on inheritance for their heirs was a #1 concern. Almost 70% say that that's one thing that they want to have. And number two is paying for child's schooling and college is almost 60%. They're worrying that they will be burdened to others with my final funeral expenses. That's about 50%. Burdening dependents if die prematurely, that's about 45%. Losing money on my investment is only a little bit over 40%. And paying for medical expense is almost 35%, a little bit over 35%. And money for comfortable retirement is about 35%. So these are the things that people worry about. So, and can the life insurance address this issue? As you already know, even before I actually go into next few pages, these issues can be addressed or solved. May not be all of it, but most of it with the life insurance product. So if we can all take care of this issue, then we can call life insurance an asset, right? So that's the thing. Here's a very first topic is a protection for your loved ones. 1 in 3 household would have immediate financial trouble if primary wage earner dies today. 1 in 3. That's very big. Where are they going to get the money if the primary wage earner dies? Life insurance would be a good one, right? And the next one is 1 in 4. Another 1 in 4 would have a trouble keeping up with the basic living expenses after several months old, several months. So after the main wage earner dies, they'll be having an issue with not with the luxury, but basic living items, living expenses. And it says 75% of all households would have a trouble covering everyday living expenses if primary wage earners dies. So this is a very, very big void, and this void can be easily be filled with the life insurance. So you, the person who's getting insurance may think this is an expense, but this can be a big, big asset for the people who are who the clients are leaving behind, especially spouse. And I thought it was a very, very shocked. It says when a woman outlives her husband, her income decreased by 50% on average, yet expense only decreased by 20%. So if two of them together and one of them die, so their living expenses is only on one person, not two people. And you would think that 50% of the expense will be gone, but that's not the case. They're saying that only 20% of living expense is gone, but their earning or their income is dropped by 50%. So there's a 30% of the gap. How are you going to make up the gap? It can be easily made up with a life insurance. So to the surviving spouse, that life insurance is an asset, big asset, very important asset. And here's another statistic. I thought it was a really, really surprising. I guess we all knew. It says roughly 80% of women living in poverty were not poor when their husbands were alive. Do we need some assets for the surviving spouse or surviving family members? I think this infographic is very, very clear that life insurance is an asset. So creating financial protection for your family. So let's not just worry about ourselves. Let's not be selfish, but think about the people who are going to be leaving, people who are going to be leaving behind. They need some wealth. They need an asset. They don't need a liability. They already got liability. But with the proper planning with the life insurance, at least they don't have to worry about money. And it also says stay-at-home parents, they also need some form of life insurance because the person, it could be husband, it could be wife. I mean, we all have before it was a housewife, now we have a new word called house husband, right? So if they're staying home, you would think since they're not making money, they're not really financially burdening if they pass away, but that's not the case. I mean, taking care of kids, sending kids to school and bringing them home from school and all that is translate into money when they are gone. Somebody has to pay for it. So they're doing free service, but if they die, it's going to be a problem. So we all need that. And later in life, we already discussed that. I mean, for some people, life insurance is only mean for their retirement income. If husband or wife die without life insurance, and if they only can rely on the part of Social Security they've been getting, now all of a sudden they're in poverty, right? I mean, as I mentioned before, 80% of poor widow were not poor widow when their husband were alive. That's a big number. So life insurance is an asset to surviving family, and it is very, very necessary asset. All right. The second part is about illness. As you know, that a lot of life insurance product, almost all of the life insurance product we carry in Epi-Digm, they all have a living benefit. So not only that the insurance company pays the client money when they die, but when they're sick, when they have a critical illness, chronic illness, or terminal illness, we also bring out money, much more than what they put in. So it says in this infographic, it says about 80% of older adults have at least one chronic illness, and 68% have more than one. So that's a big number. And 70% of us, 70% of people will need support to meet health or personal care needs when they're old. So how are we going to get that? If we have a life insurance with a living benefit rider, we can take care of that. Is that an asset? Yes, it is an asset. Right? And here's the some of the statistics. Breast cancer will cost about $23,000. Alzheimer will cost about $56,000. Heart attack or stroke will cost about $100,000. Where are we going to get this money? All right. Even if you have a savings, this is not a everyday check that you're going to have to write. If you have an insurance that covers this, it will be great. And it says also 62% of Americans who are struggling with the medical bills have health insurance. Health insurance will not cover all of it. I mean, isn't it a really shocking statistic? 62% of population are having financial difficulty with medical bills. They already have a health insurance. So in time of need, the life insurance is the greatest asset. So do we need a life insurance? That's the question. And not only that, it also has a built-in cash build-up. It has a cash value. So 52% of households are at risk of not maintaining standard living in retirement. Where are they going to get a supplemental retirement income? They could get it in an IRA. They could get it in a Social Security. Would it be good if they have an extra source? And Masako-san can tell you if it'll be a lot more beneficial if that money is tax-free. Right, Masako-san?
Yes, sir.
40% of
Absolutely.
Absolutely, right? So
yeah.
You will need a tax-free income source somewhere. And 40% of Americans have no emergency savings. I think this is a great time. This is one of the time that it is a litmus test. Do we have an emergency fund? I mean, if you're not working and you're financially struggling, that means what? You don't have an emergency fund.
Plus the cost of living is going to be sky high.
Yep.
You can't catch up.
It's been about only 2 months and people are dying. People are saying that I can't do this anymore. I don't have money. I need money from someplace. Had you have your 6 months of earning saved up someplace, you wouldn't be as bad of shape as today. We all need that emergency savings, and life insurance cash value can provide that savings. And then there's inflation that Masako is mentioning, and this is inflation on the college funding. College funding average inflation is 4.2%. I mean, we all hear that the meat price is going to go up, right? I mean, all this living,
everything
is go up. We're going to go up.
It's already up.
It's already up. How are you going to keep up with all this? We need to have a savings. And one of the good places to start saving money is a life insurance. I mean, it would be great if you already have a life insurance and you have a cash build up already. I mean, if not today, you learn your lesson today, and many years later, if something like this happens again, hopefully you have a life insurance policy with a big cash value so that you can use it. And especially you can use it for your retirement if you're young enough. So you have this cash buildup built into life insurance policy, and it is tax deferred growth and tax-free access is available, and there is no reporting. You don't get tax deduction, but you don't have to report it to IRS. There is no place to report how much money you're saving in a tax return form. So, but it is a fully legitimate money. And once again, it's tax-free withdrawals. And as I said, Masako can testify tax-free money is needed. It's, even when you're fully ready for the retirement, right?
Yep.
And life insurance and retirement saving, I already talked about it. I mean, compared to qualified plans like 401k and IRA, there is no annual contribution limits. I mean, how much money can you save by putting 7,000 a year? I mean, if you only got 10 years, the maximum you can put in is 70,000. Even if it doubles, it's only 140,000. Well, it's still better than nothing. But what if you can put like $100,000 in or $50,000 in without any limitation? Life insurance, you can do that. And not only that, there is a way to take the money out before 59 and a half. And there is no penalty tax. And a lot of times, if you design it properly, you don't even have to pay any tax whatsoever taking money out of life insurance cash build-up, right? And the thing is that some of the things that most of the product that we're talking about, and especially in this brochure, they talk about index UL and universal life. There is no investment risk whatsoever. There is no need to worry about down market because they're not exposed to the stock market risk. And there's no, once again, there's no penalties or on distribution, no tax on distribution. So this is something that we all can use. Is it an asset? I think it is a great asset. We all need this asset. And it talks about impact of tax. Top marginal tax bracket now is a 39.6%. Average top rate is a 60% in average in histories. So I'm not going to go over that. But here's another thing. Income tax-free death benefit. That's another thing. So it should the client pass away with a life insurance, and if he had a $2 million in a life insurance policy, how much tax does he need to pay? Zero. There's no income tax on life insurance policy a lot of times. What if you had a $2 million in a 401k or retirement fund? The heir only received 1.2 million. What happened to $800,000? It went out to Uncle Sam because of tax. So which is a better way to transfer your wealth to your next generation? I think the calculation is so simple, right? Internal rate of returns. I mean, it talks about, I mean, the way I explain internal rate of return is this. Let's say 45-year-old. For the 45-year-old, about $100 will get you about $100,000. Let's say this 45-year-old pay $100 and he applied for life insurance and he got approved. After making 2 payments, he got into car accident and died. How much money that his family is going to receive? $100,000. How much of $100,000 in this example is taxable? Income taxable? Zero. So if you do the financial calculation on this, he put in $200 and his family got $100,000. What's the rate of return on that money? That's what they meant by internal rate of return. I mean, with a regular savings, no matter how good of you are in terms of your investment, it takes years and years and years for you to catch up with the internal rate of return of life insurance with your investment. There's no way for you to really catch up. So that's the chart. I'm not going to go with the math. You can read about it because I'm going to send you this brochure. But internal rate of return is a great on it. And not only that, the internal rate of return is tax-free internal rate of return, right? And the thing is, you have I mean, if you had a full life and then you're about to pass on your life saving, the best way to pass on your life saving is a life insurance. There's exactly, it goes to where you planned it. You name your beneficiary. There's a predictability of where it's going. There's a predictability how much is going to come. It's not exposed to any investment risk. And there's a predictability of knowing when this is going to come. You don't have to worry about going over probates and or anything like that. It goes right to the heirs. It is very, very predictable. Is that a good asset? Yes, it's the best asset when it comes to wealth transfer. So it talks about the once again the internal rate of return and whatnot. I'm not going to go over with that math. You don't need to. I think you can read about it, and if you have any question, you know how to reach me. All right. And investment risk, we already talked about investment risk, so I'm not going to go over that either. So once again, is life insurance an asset or expense? Life insurance is an asset. And we all need to look into that. It pays when the insured dies. It pays when the insured gets sick. It pays when insured is not dead or sick, but he can accumulate wealth within the built-in cash value of life insurance, which he can access in any time without having to worry about taxation. So is life insurance an asset? I think so. So that pretty much wraps up the training. So I'm going to